All right, let's jump into it. It is 9:55 on Wednesday, the 25th of February. So ticking in, is this what's the end of this week? Is the end of the month? Yeah, so month finishes on Saturday. So yes, end of the month this Friday as well. So that may sort of play into a couple of things, just as a little sort of extra side note, just sort of like with sort of end of month flows and that kind of sort of stuff with it all. That's not really sort of my forte of it all, but you do tend to get sort of like sort of people, the market sort of sometimes booking in profits, sometimes positioning themselves in that sort of, so you can see some adverse kind of sort of flows in the last sort of day or so. It won't really sort of affect us today, and I wouldn't really say necessarily with metals, but certainly with sort of like FX and that kind of stuff. Anyway, whatever. Just an extra sort of little side note of it all. We'll start off with gold here because obviously yesterday, look, it got absolutely slapped as soon as China reopened. We did have that sort of little zone that I sort of put in there, which so it's pulled back from a technical area, pretty much right smack bang on there. Look, it was a heavy hit, and then really kind of just went dead for hours and hours, and it had this little sort of triangle sort of playing out, which is let's get rid of this arrow on here, um, which is basically, of course, consolidation, and as I always sort of say, sort of consolidation favors sort of continuation. So you look at the direction in which obviously we came into this little consolidation, which is just moved through here, and then obviously, bang, as you can see, sort of as Asia sort of came on, they didn't sort of make any attempt to sort of really, well, no concerted effort to sort of really try and rally it back up through Europe. And as soon as that America came on their line, oh, cool, we're selling it, bang, excuse me, and they hammered it right back down there again, and actually took out the pullback low from yesterday, like the day before, so Monday's session, whereas that was like the major sort of retest of this previous rejection level, which obviously sent it back down to sort of 4,900 or so. So, they obviously sort of got the break back test, got very close to it. People closed their shorts, fired up over here. We've hit a resistance. China's come back, and they've just gone whacked. So a couple of little things with this is that I marked, just for point of reference in that, I marked this little level out here. So basically this is going back to the 17th, or was it 16th or 17th? Actually, no, I think it was 17th to 24th. So this is where China went on holiday. So where's the little drawery things gone? Right in front of my face, right there. So this is where China went on holiday. Um, this level through here, basically, point being is that 49.90, 5,000, that kind of area. That's where China sort of went on holiday. Sold down, danced around it. It was a nice little sort of back test before obviously shooting up a couple of $100. Point being is that they've gone on holiday here. They've come back on holiday here. Well, if you're still holding your positions, you've just made $260. Boom, get to your desk, bang, hit the bid, and absolutely sell hard into it. And yeah, dropped. I think it was like $100 or something, wasn't it? 100 and 250. Little bit of a dribble, but this is where they actually opened it from 20 down to 43, so about $80 through there. But really $130 or so from the highs, and then obviously we had that second wave down, which actually cleared out that, as I said, that back test there, and kind of found support right where we had a mark out there as well. Anyway, so we do have the market just opening now as well. So this is the area, the actual support level. So we had that little sort of test above, which took out any sort of little potential short-term stops before coming down. But this is the actual zone, this little grey area through here, 5,100 round number, this kind of thing. And obviously, as you can see, tipped down into here, another area where people are like, yeah, cool, I'll give it a go. We bounced up and slightly rolled over into the end of the session. So I don't think this is necessarily done. So this is obviously sort of breaking down a little bit of the price action that if you've been sort of watching it religiously, you've sort of seen all this stuff anyway. But my feeling is there is a potential that we do actually sort of have this as a bit of a magnet, because it's kind of like when you have those bits of data that come out. Well, so I'll backpedal there a second. Not bits of data, headlines. So somebody comes out and says something. So it's not what I call landscape changing. It's not like, oh, well, hold on, wait, now the rates have changed, and so we need to revalue things, and so this is the justification for prices to move and then hold those new levels. Um, Basically, it's just sort of like, hey, we've gone on holiday, come back and it's up here. So a lot of people, had they done absolutely nothing, they're $260 up straight away. Good for them. They've taken profit. That can sometimes just see the whole move undo. And this is why I say sort of like, somebody makes some comments, move goes up, and then the market goes, well, hold on, it's not really actually anything changed or different. And okay, boom, it comes back down, and then it starts to move on. So I don't necessarily think this move is done. And I think that if we get down underneath, 50.90 here, we do have a little bit of a trend, only two, make this a little bit more accurate, only two touches, so it's not a fully defined thing. And also, this was the sort of the new triangle, so to speak, of the previous sort of one. So this is what we were working off, where we had that first bounce, retest underside, up over here. Hasn't really done anything, sort of continue up there. It's not worth keeping it up there, but you may get some sort of reaction here. If it, of course, these things are sort of depending on the speed coming down. But I think if you do take out sort of 50.87 or 50.90, whichever, whatever, you look for these previous tops here at 50.40, and then underneath there 49.90. Should the price sort of come back down here, I do imagine that's when we'll start to see a more sustained move up to the top side. I mean, look, in saying that, it could hold this 5100 level and we could just be on our way. If we look at the daily, it was a bit of that old sort of turnaround Tuesday kind of sort of status. So, we've moved up, we've hit a resistance area, pushed back down here. As I said, I think sort of like, you need to sort of really, I think sort of, I mean, look, anything's possible. I know I keep sounding like I'm sort of covering all bases with these sort of things, but you could consolidate through here. RSI has got room to move should this want to sort of come up here. If this were to be a full top, I would expect it to come up here to do a body fill and then come down. But as I said, I wouldn't be surprised if we do get something more. These little draw things back so I can find it. So something more to sort of this effect, maybe sort of little up, down, whatever. But if we break there to come down like this and then sort of move up in that sort of fashion. So I don't think it's sort of like done and we're coming down to 4,400, but till we break past 5250, I think more likely we may see a little bit of a sort of a further cooling to the bottom side over here. That'll obviously be actioned underneath 50.85, 50.90, that kind of zone to sort of clear out yesterday's wick to the downside there. Got a lot of these alerts here. I'm just whacking that alert in there. Taking out yesterday's wick low, targeting 5K. Cool. All right, and just write those notes. All right, so before sort of moving on, just jump back down onto those lower time frames just so we can sort of have a bit of a closer sort of look at these things. We did have a little bit, actually, I noticed this again, sort of draw these things on multiple charts, a little bit of a trend that seems to be forming through here. And sort of gives us that sort of three touch. That was that sort of like 5K retest bang. And then obviously sort of where we got the sort of bounce from last night. So this would be something that we could sort of work off here. But as I said, pretty much the idea of sort of like if you do break through this and then you got to take out that wick, it's still the same level. And this is the thing with charting as well, that really sometimes it's exactly, I mean, well, it's not sometimes, it is exactly the same chart. It's just how you decide to sort of carve it up to sort of say where's your trigger point. But point being is that, it still remains the same. Underneath 50.90 will be your sort of confirmation that this move may sort of actually have a bit more of a push down over here. This is only on the 30-minute here with the RSI rolling. 1 hour looks like it's not really showing like a full commitment with that bounce. Like it sort of came back up, but it's under 80 here. And then obviously look, 4 hour, it's not, doesn't look like it's completely done with it all, but you know, you could see if this thing sort of consolidates here, a move, an attempt to sort of get back up there. But really, this bounce here, as you can see, really just sort of brought it back up. It's a expected area from the bounce due to the sort of horizontal, but the bounce has really sort of just come back up to that sort of congestion area, that consolidation that we had through Europe. So they had the little continuation, bounce back up, and now we're having another wave down through here. So again, with your three-wave structure, he's moving down, found support, come up, find resistance, resistance at a previous level, or previous support, previous resistance here, level expected. Now we're in this leg here now. Question is, does it take out the lows? If it does, well, then that's the trade coming down here. If it does happen to sort of come in a little bit lighter, i.e. sort of rally a little bit more, it seems to have touched 51.20s, trying to respect that again, and we do find that that is it for the low, then the emphasis becomes back on this, I say it comes back on 51.74, but really you're wanting to sort of clear out that whole zone now. This is an ugly chop through here. So you want to clear out that zone, and that would be your trade to get to the top side, if you're going to undo that sort of Asia move there. Direction. That's the kind of move there, but otherwise, there you kind of that's your kind of move. You're waiting for a break of these two levels just here to really sort of give us the direction of where we're going to be going. Just a little side note with this as well. If we have a look at sort of a couple of things, we had gold silver ratio still on the back foot, so it is sort of trying to sort of put in a little bit of a negative divergence. As you can see, it's actually a little bit stronger now as well, so we're seeing this push up a little bit higher. With negative divergence, you want to sort of, not you want to, but they have a better sort of hit ratio generally when they're coming off a support area. So if we were having negative divergence into this grey zone here, that would be a stronger signal that this is going to play out. As you can see, this has tried to do, I marked it out here when we were at this point here, it started to give it a bit of a go. This is when we saw the big sell-off yesterday. Well, actually not the big sell-off yesterday. So this is when we had that continuation sell in Europe. Let me get my words right. I only had half a coffee. When we had the continuation sell in the US session, this part here, as you can see, this is same stuff. This sell here, as you can see, sort of price started to move down. That's when we saw the gold silver ratio attempt to push back up, sold back down, and this came back down underneath the zone there. I don't really ever look at gold silver ratio on a 1 hour, 4 hour minimum. But that was mainly just to sort of emphasize the point there. But the point being is that this is potentially looking like a bit of a turnaround here. We did have a little bit of a support last time over this side over here. It did dip down underneath and then sort of fire back up. That is a little bit of a support that we have worked with now. It's dipped down underneath. Can it fire back up? So as I said, it'd be better with the gold silver ratio if we were coming off an actual support zone as well. Doesn't mean it can't work. As you can see here, it dipped underneath the support zone and then sort of fired back up. But you just sort of want full confirmation will be up above this zone over here. So let's just add this one. We go, yeah, flipping, cool. Flipping H4 neg D above consolidation. Metals down. So again, sort of with gold silver ratio, very sort of rough rule of thumb, price moving up on the gold silver ratio, metals moving down, price moving down on gold silver ratio, metals moving up. So obviously we can see, you know, these big drastic pushes to the top side here, and we've seen silver and gold really sort of come off from these levels over there. So that's just one to keep on, again, just to work in with the metals trades at the same time as well. All right, fire on. We got silver. So silver actually, it held up A little bit better than gold. Is this the chart I was using? Maybe it was this one. I don't know, whatever. They're still the same. Anyway, point is, if we get onto the daily here, we can see this is a bit of a daily resistance zone, and it's tipped into it. Body fill complete from these big drop downs. Body fill is always a great target. Hits there, and okay, we start to sell down a little bit here as well. Now, with these sort of things, with it, like with any resistance area, it's not like, okay, you hit resistance and that's it, it's game over. It's just an area in where you expect to see a reaction. We've seen the buyers, the sellers here, so we can expect to see them here. Doesn't mean they're going to hold forever. This could still power through here. As I said, if we see the gold-silver ratio fail, most likely we'll see a continuation up with this area here. Though, all in all, gold is equivalent to being back up around 101 to 105 in terms of percentage of recovery from the sell-off. So gold's back up past the 61%, almost up towards the 78%, around this area over here. Silver really is only just poking its head above the 38%. And of course, as we know, 38% is still potential for a strong continuation of the move there. So this is a very vital area for silver, not only to get above, but to close above. You would want to see it really sort of close above 93 bucks, above these wicks over here, above the sort of the support wicks for that last push up over there, and really clear out this zone. So it needs a big strong day. You need to see gold silver ratio fail. You need to see the dollar fail, which I'll get onto the dollar in a moment as well, because that's teasing and that's what's keeping metals mainly under pressure. But if we see the dollar fail, most likely at the same time we'll see metals push, gold silver ratio will fail. Those things will happen together with it all. I'm not 100% sure that'll happen. I think there's probably more chance that we actually see a little bit of a cooling buff off here, particularly if we do see that sort of a lower move with gold. If we do, look, it was only 1 day sell off. It's quite a drastic sell off, and these sort of things as well. I sort of tend to find sort of like they may do the same thing 2 or 3 days, but they won't do the same thing on the fourth. Or they'll do it 1 or 2 days, and they won't do it on the third or whatever. That kind of sort of thing. So the question, the point I'm getting to with this is sort of like, are we going to see a big sell off on Asia Open, or is the market expecting that too much because we saw the big sell off on Asia Open yesterday? If we do get a big sell off today, I would say then tomorrow people will be like, yeah, cool, I'm going to sell it, and that's when we'll get a big rip back up. Um, that's just the way that I sort of tend to think with these things. It's sort of like, they'll sort of have a bit of a pattern then, but when it becomes too obvious or too easy, people position themselves for that, and then that becomes the trade that's too easy, and they'll send it the other way. That can happen after 1 day, it can happen after 3 days, after 5 days, anything. There's no sort of set way for it. But that's just something to keep in mind because we did have that big sell-off yesterday. The bounce, all in all, has been, if I'm talking about gold, pretty lackluster in terms of recovery. Silver actually did do a lot better than gold did in the short term. So where's the sell-off yesterday? So here's the sell-off yesterday. Silver went right back to the highs and then sold down again. Bounced back up here again. Still finding resistance at this thing right on the sort of top over here. And this is what I'm saying. It's like it's crucial for it to get a big sort of fuck you kind of candle, for lack of a better word, and really hammer up through the top side over here. If you can't, like a dribble's not going to do it. If it dribbles, most likely it's going to come back down. You need to get something with real power, real volume, real commitment, and sort of get that close back up above sort of, as I said, you'd want to see it close above 93 to really sort of say, hey, this area is done, this resistance is done, and this is going to be sort of continuing here. Otherwise, I sort of think that you're probably more likely to sort of see, as I said, same with gold, if gold does sort of come off, a little bit more of a dribble to the bottom side here. So that's an area that you want to sort of keep it above. That's an area you want to see short-term close above 89, but daily close above 93. Should we close underneath sort of 85, 85.40, 85.30, those kind of areas there, then I would say probably a more likely a move to the downside there. If you look at the RSI on these bounces as well, it's not moving much at all. This is only the 1 hour. 4 hour looks like it wants to roll over a little bit more. But the 1 hour here, this RSI, look at this sort of like, yeah, we sold off. Yeah, price came all the way back up. And this is why it's important to use at least one or two of these indicators with these things as well. RSIs are great because this is the relative strength. Think about it, sort of the commitment of the actual strength of the move. Well, you can see it only just got up over to 54 here. Price went right back up to the highs. This thing's barely moving through the middle. And what happens to it? Well, it fails. Think about it sort of like on a small scale. Like, if you've got 50 people buying it, RSI is moving up, price is moving up, bang, it holds. Now we sort of see the sell down come up here. You've only got sort of 3 or 4 or 5 people buying it. Well, what happens when the other sort of 45 go, hey, you know what? I'm not really committed to this. They dump it. You only got 5 people trying to hold it up. There's not enough capital. There's not enough pressure. I'm trying to give it sort of fun words for it all, but there's not enough to sort of really hold that price up there. And as you can see, it fails and fails and fails again. So, I think sort of, as I said, short term, they're the kind of little zones that we're looking for. Close underneath 85.50 or above 89 for short-term intraday session direction. All right, so let's just whack a couple of these little candles on here, just to emphasize the point. And down candle here, and then up candle there. Bang. All right, and just a final note on that one as well. Just again, gold silver ratio, we see that break to the downside. Silver's going to be the bigger beneficiary of that, and that'll be another indicator. So when we see this thing sort of moving up the top through here. All right, so I'll tick on to the dollar, and this is the reason that these things are not sort of massively continuing. They're sort of cautiously moving forward. So bear with me 1 second. Actually, just got to manage a position. Is obviously that dollar is threatening a breakout. Now, it has sort of come all the way back up over here. So a couple of things to unpack with the dollar. Obviously, sort of a bit of a charge through here. This is very much a line in the sand for it. I've said this a number of times on that. It's the 98. It's actually the 61% retracement of this fall down through here. It actually found support on the 61% of that bounce first move over there. And now we've actually sort of reclaimed this level here, right pretty much to the level. Like obviously we didn't come back to this horizontal, but to this diagonal, this rising support, but the horizontal held exactly as this plan was, and buyers have stepped back in here again. And this is very much threatening a push and a break to the top side. What this is actually doing, it's a bit of a cleaner chart, is potentially doing a cup and handle. So I don't think they have a thing for this, do they? I mean, again, whatever. Yeah. And then, yeah. Oops. That. That is a cup and handle. So with cup and handle, you look at sort of where the base is. So, this is kind of like, do you take it from down here? Do you take it here? Whichever, whatever. Let's just take it roughly about there. Say, look, that's the sort of the peak down the bottom here, all averaged out, whatever. And then that sort of distance from the bottom of that cup actually then comes off the pullback of the base of the candle, which comes up over here, more or less pretty much the same in this one over here. And that's what gives you your measured move for a cup and handle setup. And what we can say is the confirmation for this is still, or this is actually, for some reason this chart, I don't know, this is capital.com or whatever, the confirmation for this is above 98. So let's get back onto the actual chart we're using. Still, it's the same thing here. You can see there's your cup, here's your handle, yada, yada, that's the distance. This is your price target up over here for this sort of move. And you got to sort of think again, I mean, this is what I was saying before, all these charts there, it's all the same. It's just how you want to chop it up. Cup and handle, that's fine. It gives you a bit of a sort of a a measured move target that you can work with. But also you can look at it like this. What are the buyers doing? They spend this much. Oh, we de-dollarization. Market hates it. Well, buyer said that's cool. I won't let it get down here. It's going higher, so I'll better buy it now. Same again. Oh, wow, they sold it down again. Better buy it now. Bang, and they're pushing. And you can see that the buyers are pushing the pressure up towards this line here. And it's not a sort of one where we're seeing the sellers continually move down. They're holding this line. And when they hold the line, that means that this is the level that you're not sort of dealing with this kind of stuff where they're applying more selling pressure and pushing down, pushing down, pushing down. Like if you think about it from this sort of angle, from the seller's sort of perspective, well, the sellers were here. They then pushed down to here. They drove it all the way down here. Buyers step back in. They've come in here, push back in. There's no continued push, or actually there was. It was this little zone, internal zone through here, which gave us that breakout to come back up and test these guys over here. But you can see that they tried to sort of push it down, push it down, push it down. Here was the sort of turning point here, and buyers are actually broken through and overrun that first lot of sellers. Now we're coming up to test this lot of sellers. And as you can see, like just through just the actual chart right here, that it's pinching up into this top zone here. The question is, are the buyers going to push it up and then hammer it through to the top side over here? And this is why metals have been very cautious to actually break higher, because they can have the ability to run at the same time, but generally not. The rule, it's more sort of like an exception to the rule that they would actually sort of run together, other than it being the rule. So as I said a number of times, I used to work off of the idea of a 90-10 kind of split. 90% of the time they'll run inverse, 10% they'll run together. Look, that probably still is somewhat true, but we have sort of seen things, correlations very much go out of whack over the last year or so. However, as you can see with this, we're seeing the buyers apply the pressure, pushing up into this zone. This is on the 4 hour. If we get down onto a 1 hour, you can see that all through yesterday, like, I mean, we had last Friday, we had that sort of big sell down. Let's get rid of some of this stuff, actually. Emphasize that point enough. Last Friday, we had the tariff Supreme Court ruling, yada, yada. On open, they dumped it, had that little high heel bottom, which I sort of spoke about. And then it's really sort of come back and recovered and pushed and pushed and pushed over here. So this is where we were at yesterday, where metals are really taking that second bath, where they sort of had the hammer sort of on in the US session. Oops. Unable to break through, pushes back down. What do metals do? Metals recovered. Dollar did not really pull back much at all, is already driving higher here again. So this is why this will be very crucial, I think, sort of particularly with the metals, because where we're sort of finding a small little zone at the moment is through this area here is, what's that alert going on? Metals moving a bit? Yeah, a little bit, not really. What we're sort of finding here is that's your kind of intraday session zones. But even if you do get out the top side, you got to clear out this bigger zone, because even if you get above last night's little wicks and that, you're still up into this big resistance high time frame zone over through here. So you'd want to sort of see this sort of really open up and really get this big blue candle coming out the top side here. If this happens, metals are going to play out, as I said, to the downside. We're going to see most likely gold-silver ratio going through the highs. We're going to see silver off and gold off. That's what will happen, in my opinion, should we see the dollar index, DXY, break through to the top side here and get a close above 98.10. Big candle, close above 98.10 shows that the market is committed to the move, and that we're probably then going to see this thing move up into the mid 98s. So mid 98s, low 99. I think 99.20 or something was the measure move price target there. Actually, 99.50. I don't know. No, I think 99.50. Anyway, whatever. We can look at the charts later. But the point is that sort of that's what you're looking for. You're looking for a big, strong commitment move to these things. And same with sort of when things are coming through falling resistance. You want to see this drop down here, and it went bang straight away. Why? Because the market was looking at this line. So it broke the line, bang, okay, people jump off. Look, it's only on a low time frame, so it doesn't change the bigger picture. But in the short term, well, metals, gold bounced 60 bucks just off this one move here. Why? Because you see the big candle, because that's what the market's doing. They're looking at that line, and when it breaks, it reacts. Same sort of thing over here. This is 12 o'clock. This is where we saw gold and silver sell off. It was a big candle. Yeah, it got sold down into, but the point is, it was a big candle. Market was watching it. As it moves, it broke through. Same sort of thing over here. You want to get a big candle, and that's what I was saying with silver as well. You want to get a big candle, which is a commitment to that move, that the market's actually looking at it. If you get sort of like a little dribble up to here, most likely it's going to fail. If you see these kind of moves here, like little dribble, 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 and okay, yeah, we failed with it all. So you want to see the big sort of close, candle moving through, and you want to see a close there, and I would say metals go to the downside. Now, that being said, there's obviously still a chance that, we broke this, or on the underside of this one here now, that we could either sort of consolidate here or even potentially pull back down underneath here. So if this fails yet again at this level, fail here, fail here, fail here, we could be sort of heading back down towards this sort of 97.50 area. And if we see that, we're going to see silver and gold attempt their move to the top side there. So for me, I think the dollar is really the king of sort of what's dictating the direction in that at the moment. And because it's been so weak for so long, you know what I mean? It's at multi-year lows. Half the world is positioned for its absolute demise. Should this thing move up here, you're going to catch a lot of people off guard. And that's why I think people are going to have to sort of like draw funds from elsewhere, draw funds from their last little gold rally or, 2025 rallies, those kind of things to sort of cover sort of positions, or just to sort of be on board with the dollar while the dollar's coming off multi-year lows and potentially offering at least at minimum a medium-term trade, if not more. So that's for me, this is the sort of number one thing that I'm kind of sort of watching in terms of direction. But I think short term needs to hold above 97.70, but top side needs to go above 98, 98.10, and then major downsides 97.30 for. All right, and I'm back. Tech issues. The computer seems to have sort of frozen up, which is infuriating because it's just an extra step that you got to do, and you no doubt I got to then sort of link the videos together, and it comes out a little bit of a weirder sort of format with it all. Anyway, what was I saying? Look, dollar threatening a breakout over here. The fact that it came down through this thing, I wouldn't be surprised if we see a little bit more sort of a consolidation, a little bit more of a question, potentially tip down underneath here. I do think it is going to break out, but the fact that it sort of had that little sell down, it did feel a little bit stretched, to be honest, coming into this area. I did question it a little bit, but at the same time, it is still up towards those highs there. It's just, considering both sides of it all. Should we see a little bit of a cooling off and coming down over here, that could give us a little bit of a short-term blip higher on metals, but I do think we are destined for a breakout on the dollar, which will ultimately lead to a sort of bit of a cooling in the metals. So any sort of pushes higher, if we start to see the dollar rally off a push down lower, then I think that'll be a sort of sell into the move kind of play. If it does commit to the downside over here, well, we could see sort of, as I said, metals just have a bit of a down day, and they sort of could be bouncing back there a little bit there as well. All right, sort of move along. We have Aussie. Now, so Aussie still respecting this range pretty much, as you can see. So it came down in here, tipped underneath, same time that sort of the dollar sort of failed to get its breakout. What happens? All the positions revert. Everyone's like, sell it, sell it, sell it, sell it. Oh, the dollar's not breaking out? Okay, that's cool. Put the positions back on. Bang, back up over here. This has been a headache. Look, it was a headache actually sort of through this area through here. I did get some shorts off, held the shorts through this area and got sort of caught because I was like not quick enough to realize they were just playing incredible games. Started to get on the short side here through here again and actually closed one out around 40 yesterday. So I got out around this point down over here based on the fact that in out seems to be the strategy that pays a lot better because this is an absolute headache, and anybody that's trying to sort of buy and hold something is either getting stopped out, having all their gains sort of just given back. It's not a nice time to be sort of trading with that kind of sort of thing when price actions like this. But what it is still doing is really sort of confirming these two levels. If I can ever select this thing, to be the breakout directional sort of plays that we are looking for. So, again, close up. We did actually get a close up over here, depending on what time frame you're on. On the 1 hour, I think this is very cheeky sort of thing. Came up here, close on the highs, turned around, bang, all the way back down. But that's all right. They did the same to me on the downside over here. So I was like, here we go. I'm going to hold this one. And of course, that is the time they actually rip it right back up to the other side. Anyway, that's the name of the game. Point is, what we're seeing is this little midway range, and with these channels, you tend to have obviously your high, your high and your low, and there'll be a sort of midway point with the channel as well. So here's the overall channel, and then as you can see, it's trying to find support, resistance, support, resistance, so and so all along here. And as you can see, it's attempting time and time again, and it's finding resistance here. So a close above 70, 75 opens the door for a topside target, topside resistance test, and then opens up for the potential, obviously, to break to the top side there. Should it not be able to reclaim 70, 75, and we come back down over here, well, of course, that's putting pressure on this downside here to then potentially break down towards 69 cents kind of area, well, 69.90s, high 69.70 cents, that kind of area of it all. We do have CPI today. Of course, CPI inflation's been an issue for Australia, for the RBA, for the Aussie. So should that come in hot, then we could see this potentially break a little bit higher because it reaffirms that whole sort of, we need to keep hiking, we need to keep the rates up because inflation's getting out of control story. And obviously sort of, a more hawkish kind of sort of tilt on things is going to be sort of positive for the dollar. I've said this 1,000 times, so if we do see the dollar, the US dollar, DXY run, our hot CPI is not going to be able to sort of get Aussie to break out. It just combats the move that could potentially be happening to the downside. So that's why it's important to be sort of aware of sort of like when you trade the Aussie of sort of what the market's doing on a broad sense with the US dollar, and that's sort of denoted by sort of what's happening with DXY, but as well with our own local data, of course. But should we see, hot CPI, well, Aussie moves up, but then we see the market buy the US dollar, well, it's going to sort of pull it back a little bit. But it's better than weak or cooler CPI and the market sells US dollar. So what I mean? So it's sort of like, and then see if we have a cooler CPI, but the market's selling US dollar, well, you'll get a bit more of a bounce like this. And so you've got to use those two forces together. It's not just necessarily what's happening on the local front or just what's happening on the US side of things, but it can either be a multiplier or it could be something that works a bit inversely to it. And that way it'll sort of like retard the move a little bit more. But, for extreme moves, you get sort of like, for us at the moment, or for the US, sorry, for the US for us, no, for Aussie, a cooler CPI doesn't mean, look, again, it depends how cool it comes in, but anything in that direction, expectation is that it sort of comes down a little bit. Expectation is it comes down a little bit, but it's still quite elevated. It's at 3.8% or something. So it's not like, okay, comes in cool, well, we'll come back down over here. No, but if it moves in that direction, and again, with the data, it's important to know what it was previously and what the expectations are. So what's the market pricing for? Because you can't sort of have a sort of an assumption how the market's going to react if you don't know what they're expecting. And so if they're expecting something cool and it comes in a lot lower, well, it doesn't mean that fine, we're gonna cut. but it removes the necessity to be so hawkish and to really have the argument of we need to do more and more cuts because, sorry, more and more hikes, because the hikes are what will effectively combat the inflation. But if inflation's moving in the right direction, you remove the necessity to be such a strong-armed position and hawkish sort of take on things. So, yeah, it's just important to sort of know what's happening, and that's coming out in actually 40 minutes, I think. I think it's 11:30 that comes out. Yeah, so 11:30 here. So year on year, as you can see, just sort of expecting to have a little bit of a tick down there. All right, and back onto the Aussie. So yeah, anyway, that's pretty much a sort of take on the Aussie. CPI is going to be the director in that, and then obviously we sort of see what the market's doing with the US. But I'd say below sort of 70.30 or above 71 for your closes will break this channel, and then realistically, what we'll be looking for is pretty much because it has been such a defined channel, measured move is going to be pretty much the depth of the channel. So if we go measured move here, either out this side here or down that side there. So we're sort of probably seeing a move, 69.70s, 69.80, or back up to testing the highs at 71.50 on a break out of this channel, either side of it all. All right, and finally just tick along with the yen. This thing is just punching higher and higher. So look, this is the level that I've just been touting. I don't know, last week or so. It's just back to Thursday last week, which is this 108.80 level. Seems to really just be absolute rock solid for the market. Should this thing break, when this thing breaks, whichever, whatever, I think that'll be quite a sort of a big move for it. However, at the moment, the yen just keeps going from weakness to weakness. We saw a big, massive jump yesterday. This was around Europe. Yeah, just before Europe opened, a sort of early pre-market Europe, and that basically back off the comments of I don't know Tachi, I don't know whatever her name is from over in Japan. So saying so she doesn't she's cautious about more hikes, and again same sort of thing like I said with the Aussie, cautious about the hikes. Well, that means there's less likely to be doing the hikes, which is seen as a dovish move. Dovish move, weak yen, market went bang and slammed it out the top side here. I mean, what did this do from 50 up to, about 100 points or so up the top over here? Really sort of takes us back up to almost to these highs here. We got a bit of a sort of rising resistance that looks pretty good sort of through here. Came in just a little bit shy. But as you can see, pretty much the majority of that move undid within this is on the 1 hour, so what, the next 6 hours or so, undid a lot of it. Sort of managed to bounce off this little lower time frame resistance area and obviously dribble up here a little bit more. So look, it's a bit tough to sort of trade against yen at the moment. Well, trade with yen, I suppose, depending how you want to word it. What I would sort of say is that you do have a little bit of a rising support through here. Look, it's a bit tough. I want to say sort of down to these sides over here, but as I said, it's just getting so incredibly weak. So what could get it there is obviously a little bit of the CPI today as well. Should we see that cooler print, that could see a little bit of a break and a bit of a downside with the Aussie here, and then sort of battling that against the yen. If we do see any sort of intervention or intervention talk from like rate checks and all this kind of stuff, that's obviously going to strengthen the yen a little bit, and we're going to see this potentially push to the downside there. So they're the kind of things that I'd be looking for or trying to sort of pay attention to in sort of like headlines to sort of see a bit of a move to sort of come to the downside over here. But really at the moment, it looks like it wants to sort of continue moving up here a little bit more. But yeah, I'm kind of a little bit lost for this thing at the moment. We look very good, super choppy coming up, but then it just, this is what I'm saying. When it's just sort of like comments and it's just like bang moves there, you can't plan for that. I mean, yes, it was coming up here through the session anyway, but then the sort of comments just send it right up through the top over there. So, look, I think sort of till this thing gets back down underneath 109.40, you know, it's potentially still just sort of buy the dips and look for that. So 105.50, 105.60, a close above there. Close above 105, sorry, 110.60, close up over here. And then realistically, you're looking back up into, well, back up, you're looking up top of the channel, probably up around that 112 area. So that's the caution of it on the top side there. But really, I think this is the channel that you need to trade off. Whoops. This is the channel that you need to trade off for an actual direction. So as you can see, those previous highs there, open it up. Most likely, you're looking at a topside test of the chart of the channel here. If you do break through here, well, then you've got a large range setting up, and still 108 is that sort of downside sort of target from it there. All right, that's it from me.